Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to the U.S. Markets Wrap with me, Ryan Huang. And let's take a look at how the session ended last night on Wall Street. We've got some green on the screen. The S&P 500 breaking above, for the first time, 6,006 by rising 0.5% to 6,615. The Nasdaq Composite also advanced to a new all-time high, rising 0.9%. And we've got the Dow Jones Industrial Average squeezing out a small gain, up 0.1%, around 49 points, to 45,883. So helping to lift the mood is some talks that are happening between the U.S. and China. Those talks apparently going well. And of course, we've got an FOMC decision in the coming days. And also in the equation is President Donald Trump floating the idea that companies perhaps should no longer provide earnings report on a quarterly basis and switch perhaps to a semi-annual one instead. So what does that all mean for markets? Let's check in now with Yussef Gheriani. He is the Director of Investments and Operations at IHT Wealth Management. Yussef, good morning. How are you doing today?
Doing great. How about yourself?
I'm doing great as well, Yussef. So let's talk about what's happening right now in the markets. There is a bit of optimism happening or being priced in at the moment. Walk us through what you're thinking is happening in the latest session.
A lot of optimism really just all comes from technology and the big hyperscalers. It's easy to point to headlines like maybe we'll be changing the quarterly to semi-annual in terms of reporting, or to point at, Tesla, Elon Musk buys $1 billion of stock, or Google, some innovation here, innovation there. But the general trend right now is that the economy is on stable footing, and the AI innovation cycle is kind of just continuing. And so people are putting money to work and just believing in that.
Yeah, talk to us about the state of the economy, because we have been getting some rather weak data points around the U.S. jobs front. So what does it tell you about where the economy is going?
So two things on that front. Point number one, the economy, it's definitely softening directionally. The trend is in the wrong direction. However, if you just close your eyes and open them and you just take a snapshot of where we are today, it's objectively a great position. Unemployment is low. Labor force participation is high. Innovation is going well. Inflation is not particularly high. The data is all good if you look at it from where we are today, even though the trend is not necessarily great. So there's two different ways you can look at that. You can think of it either as, we're headed the wrong direction, or you can think about that as normalization. And then the other component of this, and we can dive deeper into it, is there's an increasingly a bigger divide between Wall Street and Main Street, especially as it relates to AI investment, tech innovation, and those are global kind of trends, So that's the Wall Street side versus the Main Street side.
There's also a bit of risk appetite playing out in the markets as we see new highs being hit. How much is being priced in right now with the rate cuts? And of course, how many are you expecting for the rest of the year?
The rest of the year, market's pricing in free. I think you'd be silly to try to make a bet outside of what the market is pricing in. But if you were to make a bet, I think you would probably bet on the side of the Fed being conservative and being hawkish. There's still a lot of uncertainty around tariffs. There's a lot of uncertainty around the ripple impacts of immigration policy. There's a lot of uncertainty around whether or not the United States is going to get a budget done and move the debt ceiling higher. There's still the opportunity for a policy mistake. That's still all out there. It's all, kind of fallen off of being the center of attention, but it's all still out there. And so if I'm Jerome Powell, if I'm the Fed, I'm probably trying to walk this slowly as long as the data is still in an acceptable range. I know directionally it's bad, and directionally maybe we should be thinking about cutting, but I think the Fed is much more keenly to not wanting to see inflation reignite as opposed to, see unemployment tick up by another 0.1%.
Okay, so if we've talked about tech doing well and also uncertainties in the backdrop, how are you approaching markets right now? Where should we be looking at for value or even defensive plays? Is tech the place to be right now?
I think tech is still the place to be if you have any sort of longer-term timeline. Definitely there are pockets where you can point to valuations and say things don't make sense. There's some tech companies whose earnings do not align with their current valuations, But that's always kind of been the case. And if you look across most of the Mag 7 and you look across most of the large technology companies, actually, they're cash flow machines. They're printing money. Yes, they're investing incredible amounts of it, but those cash flows are there and those balance sheets are sound. And the reinvestment is just leading to more growth and more earnings. And they're investing in R&D. They're investing in innovation. So while there are a couple names that people can point to and say that maybe they're a little bit over their skis, the names like the Palantirs of the world, right? Which, by the way, great company, but stretched valuation, right? So you can point to some of those if you feel like being afraid, but really most of the tech space is cash flow heavy, cash flow positive, and reinvesting in the business.
All right. Sounds like a lot of numbers to get through. And talking about numbers, Donald Trump has a bit of a proposal on the table, which is to do away with quarterly reporting in favor of a semi-annual basis. I'm just trying to wrap my head around this. Is this good for the markets? Because it seems like it would suggest less transparency.
Companies love the idea of being able to make long-term plans, right? And there are some people out there who think that quarterly reporting means that you're always shooting for the short-term bump and instead of focusing on the long-term. I think the reality is a little bit more nuanced than that. I think the big companies have long-term plans and they're sticking to it. And yes, they're just hitting milestones on the way. That's what those quarterly reports are all about. The companies that are perhaps struggling with doing quarterly reporting and maybe are impaired because they're not able to focus on the long-term are the companies who, cautiously want to say this, generally not as well run and perhaps aren't as successful in hitting either their quarterly targets or their semi-annual targets or their full-year numbers. And for those companies, the opportunity is to go private if they don't believe that the public markets are reflecting their business. However, I would just point out we haven't seen a lot of companies in the public market go private, so maybe actually the stock is just not performing because they're not a good business. You know?
Yeah, I think it really comes down to the context and a lot of factors at play here, but definitely an interesting point to think about as we perhaps relook how things are being done. All right, we've been in conversation with Yussef Gheriani. He is the Director of Investments and Operations at IHT Wealth Management. Yussef, always great chatting with you. Thank you so much for your time and insights.
My pleasure. Have a great day.
We'll catch up with you again soon. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.